Today we're talking about how to invest in crypto, a complete beginner's guide, step by step. All the time people invest in crypto and they don't take the time to pay attention to what to invest in. Ultimately, I always invest in Bitcoin or Ethereum. You know, a lot of people get started and see 1,000 different coins and don't know where to start. You know, basically, you need to take time to go over what your overall timeline on investment is. Are you a long-term investor? Are you looking to trade crypto? And today we're just going to have a complete beginner's guide to investing in crypto. Just a steady, practical roadmap you can follow, whether you're buying your first $20 worth of crypto or if you're building a long-term plan. Before you even put $1 into crypto, you need clarity on the two assets, both Bitcoin and Ethereum. Once you understand these, the rest of the market makes a lot more sense. Bitcoin is a digital store of value. Here's the simplest way to think about Bitcoin. It's digital money with a limited supply. Over 21 million coins exist today. No company controls it, no CEO can change it, and it has operated nonstop for more than a decade. People treat Bitcoin as a place to store value long term. It's got a lot of volatility, but it has a proven track record. Ethereum is the digital application layer. Imagine a global computer anyone can build on. That's Ethereum. I'm going to take a quick look at a few reasons why you should choose Ethereum or Bitcoin first when you're investing. You know, basically you want something with a proven track record. And a few reasons to invest in Ethereum: because of smart contracts. And really, that right there is a major breakthrough in technology. And if you're just wanting to look at a long-term track record, you know, Ethereum's continuing to have strong forecasts for the future. You can look at digital ownership, decentralized finance, and tokenized assets. Almost all of that innovation runs on Ethereum. A few reasons beginners start here is basically Bitcoin is in the S&P 500 and Ethereum is in the NASDAQ. They're established, widely used, and easy for beginners to understand. Next, key thing is to select the right beginner platform. A lot of beginners get stuck right here because they don't know which exchange to use. So let's narrow it down which platform to use. Good options include Coinbase, Kraken, and Gemini. I have a referral link in the comments for Coinbase. That's the one that I would personally recommend. You can get $15 worth of cryptocurrency just when you sign up and continue to do the learn and earn and get paid monthly. These companies operate in the US, but follow strict regulations and make the buying process straightforward. You should always be cautious about platforms offering unrealistic returns, exchanges with no regulatory oversight, and apps you've never heard of that are suddenly appear in ads. Next, we're going to go over storing your crypto safely. Buying crypto is easy, Protecting it is where beginners run into trouble. You have two main ways to store it: exchange wallets and hardware wallets. Exchange wallets are the simplest. When you buy crypto on Coinbase or Kraken, it stays in your exchange wallet. For small accounts, this is fine. But remember, you're trusting the exchange to hold your money for you. Hardware wallets, on the other hand, if you're holding more than a few $100s, or if you're investing for the long term, look into hardware wallets like Ledger or Trezor. These store your crypto offline, which makes hardware a little bit more protected. You control your private keys, and that's the whole point of crypto in the first place. You always have to, rule number one is always protect your principal, with any investment. So you always, you've got to make money, but you must protect it. If you don't protect what you have, then, it's really really that's something a lot of people overlook. Now we're going to talk about creating a beginner strategy. You should always have an entry point and exit point set up for anything you invest in. You got to know what you're expecting to make. It's a big key to success in the long term. Even if you only buy $25 at a time, you should know why you're buying and how you want to build over time. Here are 3 strategies beginners can use to build wealth. First, dollar cost averaging. You can buy small, consistent amounts on a schedule, weekly or monthly. It helps you avoid chasing prices and keeps emotions out of the process. That's a proven winning strategy. Second, you can stick to buying core companies, Bitcoin and Ethereum. That strategy, basically you stick with the best, and you want something with a proven track record. So if we have a recession or something, you don't lose all your money in an unproven cryptocurrency. And of course, long-term holding. You want to invest over the long term. Crypto's volatile, and if you're buying for the long term, you're obviously going to make more money because of the compound effect. You need to invest with a multi-year mindset, so that way you're not really worried about the volatility in the market, and over time, long-term planning pays. Next, let's discuss managing risk the smart way. Crypto attracts beginners because the upside can be big, but the volatility is real. Here's a simple approach. Invest amounts you're comfortable holding for years, not days. Avoid loading up on smaller speculative coins. Keep the majority of your portfolio in established assets. The goal is always protect the downside. You really want long-term growth. You're not really chasing things that have a lot of hype. Another big thing is understanding fees, taxes, and transfers. First, let's go over fees. There are a few trading fees from exchanges and network fees from the blockchain itself. They change depending on demand, so take a moment to review before you hit buy. Taxes. In most places, crypto is treated like property. Selling crypto or swapping one coin for another simply creates a taxable event. Even if you don't cash out to dollars, buying and holding is not taxable until you sell. Now, talk about transfers real quick. If you move crypto from an exchange to a wallet, always send a small test amount first. Double check the net worth. Once a transfer is sent, it's permanent. Another thing we talk about is avoiding scams and bad projects. Crypto attracts innovation, but it also attracts people who want your money. A few rules can save you a lot of trouble in the long run. Avoid anything that promises guaranteed returns, shows anonymous teams with no transparency, is promoted heavily in private messages, use pressure tactics or urgency. Look for projects with clear use cases, public experienced teams, strong security history, and real developer activity. Now let's go over what to learn. A few key things to pay attention to is how blockchain technology works, why Bitcoin has a fixed supply, how Ethereum powers smart contracts, what stable coins are used, and how to increase your personal security. Your knowledge is your most important thing. You want to understand everything that goes on with any investment you have. So always remember to use a trusted platform, and remember to decide what strategy you want, dollar cost averaging or whatever works best for you. Just make sure you have an entry point and exit point. Know what you want to make. Appreciate everyone watching the video this week. Please hit the like and subscribe, and we'll make another one next week.